you. I need a hate to take it far, make moves. Had somebody trying to take it down, place fool. You just scoring mines, that's the bar.
All right, ladies and gentlemen, I got your watch list coming into February 12th, 2020, and this one stock is going to go crazy and surprise tomorrow. I'm going to share it with you here very, very shortly. And then there is one important trend right now in the stock market that we need to be following that will tell us about everything that is going to be happening and how things are going to be playing out. So today was an interesting day. We were positive. We ended up closing negative. We had Jerome Powell talk, but there was an important trend and factor going on. You still have this stuff with the virus and all that happening. You got some big updates after hours, which I'm going to share with you guys. We'll briefly talk about the Powell stuff, but we're going to be watching that stuff tomorrow. That's going to be important. We still got earnings too, so those are going to be important. I have two other stocks to watch for. Earnings plays, the one surprising, again, I'm excited to share this with you. And then just some of the basic keys and trends we need to watch out for. So let us not waste any time. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description and it is pinned in the comments. We better see you there in the morning. It's free 99, cost you nothing. This play I'm talking about, I'm going to execute it live. When I find the play again, we need to see how the pricing works out. But I think even up until the end of this day, this is a stock that slipped under the cracks, I think. But if anything, come there on stream. We're managing all the other plays. We still got those NVIDIAs and all that. So be there, ask questions. All we ask is that you're positive and respectful. And do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, any earnings plays? What do you think about this stock I'm going to share with you? And yes, so let us get right into it. I will talk about the keys that I have for you. A little spell check there, but I will share with you the main play. Well, we did make plays today. That's not the one I have for you, but this is the one stock that is here for the title. It is going to be Redfin. They report tomorrow. I will give the disclaimer. I own a significant amount of Redfin shares, so I'm not talking about adding shares. I'm using this as something in the quarter. I don't plan on selling any of my shares anytime soon. However, I'm going to flip these options for earnings, so I'm going to try to flip it tomorrow, but mainly I'm going to make an options play to buy, and then whatever happens with earnings, we're going to use our same criteria. But the stock is Redfin. I will share the logic with you after we get over the keys, but that is going to be the play, so keep your eyes out for it. You could come back here tomorrow like, oh my God, you were so wrong. I'm like, how does anybody believe this guy? I could give you way better random advice. Here, do this. No, but I'm excited for it. I'm going to keep it small. I'm not going to go too crazy on it, but I have a nice theory there. So beyond that, though, the main keys that we're going to watch for, it's going to be the politics and the economic data. So tonight, we're going to have the New Hampshire primary. That's going to be, you know, affecting some of the healthcare stocks, like I said, but they actually did good today. But then there's going to be more of that economic data coming out tomorrow. Again, there's going to be the Fed, then the Thursday, Friday releases. So watch out for that. I'm waiting specifically for Friday, and that's where our interesting chart is going to come into play. But now watch the foreign markets and currencies, because we reacted on Monday. Now it seems like the markets globally are following the U.S. Watch what the currencies say, both Japan and China. But now this is the oil SPY divergence. So this is that main chart. We brought this up today. I'm going to keep showing you guys this. This is /CL. So red and green is oil futures overlaid with the SPY. This is that big divergence where one of these is going to meet. It's very important because, again, today we didn't get another bounce. That's another day of markets going higher, and even if it stays the same, it's diverging. This hasn't bought us enough time yet to make the exact play I want. However, use this as an indicator. This was free game all day today, because you'll see what happened with oil. The SPY kept following it. So again, they were kind of matched up there in the morning after the futures and the market opened pre-market. SPY went up a little higher. Oil started dropping. Oil tried to bounce a little bit. The SPY came up and caught up with oil every single time. So it looked like oil has been leading today. This is what we want to see. But really, a lot of the effects, the market didn't really start to respond to oil until oil really started to break $50. So this is a key break even for a lot of oil producers, a lot of oil stocks. So keep this in mind, but watch this divergence, and that's what we're waiting for. The question is, what's going to happen this week as there's more developments with the coronavirus? Again, the stuff that Jerome Powell said, a lot of people, they even asked Jerome Powell today, they're like, since you started talking, the Dow Jones has fell, and it had nothing to do with Jerome Powell. He didn't really say anything we didn't already know. He really recapped some of the repo stuff. There wasn't anything too crazy to get out of it. I think tomorrow we might get a little bit more headlines out of it. But essentially, it was this oil coming down. This is, again, signifying the demand and what we have with China. So this is the main thing to watch. And the question is, whenever this divergence snaps or you see oil break a level, that is going to dictate the broader market. It's now, we just got to see how many days of a lag is there, or how long will this inverse occur. And again, regardless of, you know, if you're trying to catch a short or not, if we could get a gauge on what's going to happen here with this divergence, which one's going to lag or lead, you could play one of them to play whatever move, whether it's up or down. So I like that, but that is going to be the most important trend you need to be watching here just in this next week and the next week after that, because again, we have a big earnings week. So there's that. The other piece of big news that I referenced earlier, this came out today. This is the S&P credit rating, and I didn't really think about this. This is usually one of my like tinfoil black swan stuff, but this happened. Last time there was S&P downgraded, you know, the United States credit, that was like 2010-11. You saw a 15% drop in the SPY. That had to do with healthcare and Obamacare when they were going through that battle and the government shutdown and all that. But this was interesting, but it's totally right up the alley. S&P credit rating, they said that the virus is now a high risk to global credit conditions in Asia Pacific. So changing their outlook, they haven't changed their credit rating, but this is usually what happens. If they change their outlook and that situation progressively gets worse over the next quarter to 2 quarters, it will lead to a downgrade in credit. And this is a huge risk, but you're also getting an idea of how the financial market is viewing everything. Pretty much S&P says the virus is high risk to global credit in Asia Pacific, and then an elevated risk for the rest of the world because the spread is somewhat contained to just China so far. But now you guys are seeing any of this coming from credit agencies. You're seeing how the markets are responding. We want to see tomorrow, futures, global markets, and everything, how they digest this piece of news. But for the most part, you now have estimates of what's happening. Even S&P came out today, the same set after hours. They were even insinuating, or they specifically said that China's going to lose about 0.7 of their GDP, bringing them down to 5.0, and that you should see a rebound by Q3, and by the end of 2021, all lost output from this coronavirus will be made up. That's what they're saying, but these are all estimates now. So now that you're seeing estimates come in for all of this and how everything's going to play out, the question is, are they going to beat or miss? And that's going to determine the price of, again, oil and the broader markets and how people are planning, you know, future pricings, what they're estimating. Because now if China does worse than those estimates and the situation actually gets worse, then, you know, you guys are seeing how fast Wall Street is quick to take an issue, and they're already factoring numbers and data. So if that number changes and we miss those estimates, it's just like earnings in a bad miss. Or, you know, if they beat those estimates, you guys, you know, both ways. It's kind of like earnings for the stock market, and this is just a weird event. So that is pretty much the main thing. Again, watch that trend, watch all of this data, be slow with it, be still patient but ready to move. That's really what it is. We're just going to take everything really slow until we, you know, start to see certain indicators and assets and currencies and all that move, and then we'll be able to act, or at least get confirmation on a direction. Remember, it's better to be late than wrong. But let us get into the plays. So I'm excited for this. Again, you're going to have earnings tomorrow morning. The 2 earnings plays, well, one, Shopify. We need to see, depending, I think it's going to be, I wasn't able to ghetto spread that play today, unfortunately. So shout out if you did, because the play was up this morning. I didn't do it. I thought it would hold up, then it dropped, so I didn't get that. But I think Shopify will do good, but I'm worried about the continuation. Usually they don't have a continuation. So if it's a big move, there will be a continuation. If not, whatever happens in the morning, you know, and we might have to readjust and do a swing from there. But good luck on that if you played it. Next one for tomorrow is going to be AMAT. We still haven't got this play. Now, be careful of this one. We'll talk about this a little bit more, but that's the second one. The first play is going to be Redfin. So I do not know what play I'm going to make on this yet. Where is it? It's on here. But why do I think Redfin is going to do good? Well, one, it's an IPO. And again, I'm big into real estate. I own a lot of shares like this. Again, I have to check the portfolio. You know, I bought it years ago, but I have no less than like $30,000 or $50,000 just in Redfin stock. I really, really like it. And again, I'm not really going to judge it for my long-term position here, but what I want to look for tomorrow, and this is what I really want to get interested in, and we could even add this to the long-term account. I might look at some of the leaps. They're a little bit expensive, or if we get some time on some of these contracts, but I want some cheap out-of-the-money ones because, again, what I'm thinking is that Redfin could surprise. And now the logic is real estate, and all the real estate data has picked up, even real estate transactions, even how Redfin is doing. They've been getting a lot more business. And even then, since they IPO'd, you know, the market was doing good around 2017. But ever since they IPO'd, this is kind of a chart of how real estate has been. 2017, 18, you know, it was already at the top and it started to slow down. Real estate was not good in 2019, but now towards the end of 2019, beginning of 2020 so far, the real estate market has been taking off. You guys have seen the new build data. That's the first part. The second part is they're now back with all this real estate data doing good. They're now back at that IPO price. So any earnings at this IPO level, it's kind of like Snapchat reaching profitability. I don't think Redfin's quite there yet, but how they do from here could really lead a breakout moment. So again, they're not really too big of a mover, but it's at a crucial point. So that's why I think it could surprise both ways. If anything, I'm more towards the upside, because if it does go down, it could drop. And, you know, I think it'll only drop so much. I think it'll really reflect the real estate market again. But if it does good and people's estimates do good and they're able to surprise, I really think it could break out here. So that is the first one. Gonna make that play live. I have my main idea that I'm shooting for at least the March contract, but I do want to see if we could get some leaps, if we could do them on a debit spread or something, or again, even add them to the long-term portfolio on the smaller accounts, because again, I think this is something, I love them as a long-term pick again, but we haven't really added these to the YouTube account. So watch out for that one. As far as everything else, we're still holding those NVIDIA ghetto spreads. Again, we had that one contract. We had the 7 contracts in March. Those went up a lot today, but then it kind of came down. But NVIDIA had a really, really nice run up. I still like it. I think I'm going to hold them. Again, now that I have them ghetto spreaded and I've already been able to take out profit, I might be holding the big position into earnings. I think I might take a little bit off of that because again, that $300 position turned to $600 yesterday, and that $600 position became $1,300 today. So I think I might hold that, or I might sell 1 or 2 contracts, and again, I might even sell the 300 on February 21st and keep the 305, 310 ghetto spread, and then use that to buy like a $200 put for like February or even March. So that's my logic with it. Again, we've made the play free. I kind of want to parlay it for a bigger trade, but again, look at your account, look at how you've done. You try to make the play free, give yourself a little bit of upside, but no harm in taking profits. You could sell out right now at 1,000%. We had that, so this would have been the 4th one. If you want to take that ghetto spread, you collected $70 and it has $700 net profit. So you could sell out right now on the February's, get $700 cash. Plus, you already received $70, and it cost you really nothing. That's why it's a, you negative $70 to $700 profit. That's a crazy, weird 1,000%er. But then there's also $1,100, $1,300 in that other contract. There's free money here if you want to take it. So again, you could take that, play all the other earnings. We still got about 3 or 4 more weeks left. So I mean, hey, it is up to you. Be smart. Go with your first instinct. You guys are usually right. Don't talk yourself out of good ideas. Your first instinct. Don't talk yourself into staying in bad ideas. Whatever you're comfortable with. If you feel like you're risking gambling, take that profit, baby. It's free money. So watch that. That's the one I like. And then the next play we made today was a Roku, March 20th. $85 put. So these ones had a wide spread. I got them at $60 for one. The spreads are wide. There was a lot of activity that came through on it after we started getting, the Colt activity, but even then, you'll notice the spreads still remain the same. People, the wide range to get filled on. This is telling you something. The values are a little shaky here. But now, why I got the Roku, I like them for earnings. Again, my big logic with Roku is this just main level right here. Anytime they broke below like 130 or even like 124 where they were at, that's just sending them down to the next level on the low side. So I like that. Remember, we got those puts, and the puts will quickly go up. But now the stock has jumped up like 20 or 30 bucks in the last 2 days. So the puts have gotten dramatically cheaper. I know these puts just a few days ago were going for $200. So not too bad. And even like some of these like 100s, 105s, they're going for a lot of money. So the puts are a little cheaper. My plan, hopefully, if it keeps going up, we'll see if we can play a cheap call or maybe even a cheap call debit spread. But I like Roku more from the downside just because it's at a danger level, and even coming into earnings, their last earnings was bad, but you see they're selling off more and more from that and establishing a level. So depending on the estimates and prices, people are going to really evaluate, is there market support and is there, future value pricing above 120? If not, investors are really going to start thinking really sub hundreds. So that's why I like that play. This is our average down. Remember, we bought that other like $50, $60 one. So we're technically in here for like already 100. At this one, we got a little bit more time, but I like Roku's. Those are great. And then finally the AMATs. And again, Redfin is going to be the sleeper, but that's why I said the second play tomorrow is going to be AMAT. Again, this is the one we like. Just because it's a random one. I have to see the option prices, but now these last 2 days, it's jumped up a lot. That's almost from $60 to $64.50. That's almost a 10% move, believe it or not. It's a big move. So what I'm afraid of is the option chains being overpriced. And again, so what I'm going to try to do with AMAT tomorrow if the opportunity's there, we have to really see it. My plan is to flip it on the way up. So meaning, you know, if we buy it early in the morning, we could buy a large amount of contracts. And then if, you know, if there's still the IV run up, we should be able to double them up and then be able to get free plays. But again, we tried that with Apple and AMD. And remember, we got crushed on those. So, and this is why, because 3 days ago, these contracts were going for 30. Now they're already up 100%. And, you know, that's not even, you know, look at even some of these ones, you know, from 48 cents to 170 to $1 to now they're even hit like $2 at the top. I don't even want to look at the February 21st. I think we should look at February 21st. Yeah. Yeah. $40 to like 120. They've gotten such a big premium run up right here that usually when that happens and you see how they're kind of in the level, it's just like those Apple and AMD before earnings. It's kind of already priced in there, especially when it's made almost a 10% move. So keep that in mind with AMAT. But besides that now, watch Amazon, even Facebook. Amazon, a lot of people talking this 2200 break. That could be very, very crazy for them. And then they got a news with Japan and starting their AWS thing. But then also Facebook, Google, Amazon, all the tech companies, they've got these probes from the government regarding their acquisitions. Facebook took that a little bit bad. And remember, Facebook is a negative earnings continuation. It dropped, came up. So how it reacts here could be interesting. That was big volume on it today. So it's lagging comparatively to the market when you see how it's operated today. And our March puts that we rolled over to, remember, we cashed out 1,000 on Facebook after the earnings. Those March puts are actually only down like $5-10. I think they were up for a little bit today. So keep your eye on that. Then watch Microsoft. I love this one. The puts went up 50%. From yesterday's close, we're up about 30%. That Microsoft March put, I really, really like it. Again, Microsoft is still leading. So you could say it's lagging on the downside. Again, that's even more volume today than its earnings, which is very interesting. Even its last day, again, just very interesting timing here. But fact is, Microsoft is the best leading. Apple's dropped almost double percentage-wise, you know, comparatively to the SPY. And, you know, Apple's more along the SPY. Microsoft's outpacing, so there's more meat on this bone. But I'm hoping those contracts on the put side get more value. I'm going to ride those through, and then once those get expensive, hopefully the calls get cheap, and we could now, you know, set that straddle up. We have till March on that. So I like that. And then lastly, HD, still holding our contracts. I've been sniping these today, trying to look. I've been stocking the contracts. It's going up slightly, and I think this was the problem with last week. I think everybody was expecting it. So the contracts are not going up as much because people were expecting this move, but they were expecting a bigger move. It was priced in than what's happening. So it's going up, but it's not making a vicious breakout as the option market was kind of suspecting. So watch that though, because again, as those expectations wither away, but the stock still stays in this prime position, that's going to make some of these options cheap and a good opportunity. So watch those. Again, watch the earnings play. Watch UNH, Cigna, all those. They went up today. I've been waiting for my YOLO. It's kind of like the HDs too, but keep an eye out for that, especially with the New Hampshire primary. Again, HD, Redfin, like we said, AMAT, but then Boeing, our play was up like 200% today. That 350 came down today. I think it's at break even right now or a little less. But fact is, this is a key level. Boeing's probably going to make a move today. I wouldn't, or this week. If not, definitely next week. But usually from here, it's either going to base for a little bit or it's going to go above or below. You know, and again, Boeing just been exciting lately. Then watch Shopify in the morning. And then lastly now, dividend stocks. Our long terms did great. If you guys didn't see, you know, we've been talking about it. Abivai's been killing it, but we're back at like 6.2% overall yield. We even clipped 7% today. And again, a few weeks ago, we were down. You know, we lost some of those gains. So watching that, the long-term portfolio step in, there's been an interesting phenomenon. So I'm going to watch AT&T. They reacted to the Sprint T merger deal. So I was hoping you got a bigger discount, but they actually ended up recovering some. But AT&T is a good one. I'm also waiting. And again, I'm either going to add AT&T, add more of that to the long-term, or Altria is what I'm waiting for to drop. Some of you have been asking on that, but check out Cardinal Health. This is one I said I wanted a while ago. You guys see that it came up, but it did something that now our favorite Abivai did. Cardinal was a 5-point-something yielding stock. Now it's only yielding 3.24%. And that's because of how much it's gone up. There's that factor. And now the same thing with Abivai. We love Abivai, but when we've been talking about Abivai, we got it at like 5-point-something yield, 5.5. Some people have got like 5.8. But now it was at 4.92 when Abivai was at 97. It was like a 4.6 dividend yield. So what's happening is that some of these stocks in that 5-6% dividend range, that's, you know, it's a little bit more risky as they start to have these earnings and investors are flocking to them in big amounts. it's changing the safety of them. And these are something you want to look for, is watch out, again, even for this rotation phenomena during all this. As some stocks go up and some stocks go down, growth becomes a little bit more expensive, but there's some dividend stocks becoming cheaper. So watch out for all that. But now, even then too, keep your eye out for some of these high yielding dividend stocks to become low yielding companies as they get more stability. These are going to be great pickups and great ones to watch. And then again, if those ones get expensive, go after the stocks that became cheap in the portfolio. So I'm going to be watching those, watching the Snapchat too. They did, again, bounce pretty good even from our average, even though we got some pretty bad averages after earnings, but everything is just right on schedule, baby. Hold and sit in the long-term chair, habibi. You sit, you buy long-term chair, you sit in chair, baby. Very, very easy. Okay, thank you. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep your helmet on. It's all in your head, baby. Don't force it. Don't gamble it. You got free wins. All you got to do is balance the books. Again, balance the books. Control your emotion. It's funny. Emotion has to do with how much money you put in. So control the balance. Set out the money aside. Don't be afraid to take profits. Get a risk management. Don't do too much. Say, hey, max gain here. Ghetto spread here. Leave it right there. Okay, we made $500. We have $400 in plays. Maybe we should take $300 in profit. Keep $100 in plays. We could turn that 100 into 500, and then we protect the rest of our capital if we want to go through for everything. Just be smart. Think ahead for the future. Remember, all you got to do is stay alive and stay in the game, baby. The code loves you, and don't forget, stand up for somebody this month, baby, and get ready for more earnings and just everything, baby. Let's go!